This is how I invested in the stock market since I was 18 so that I can go ahead and invest for the long term. So what's up everyone? I know a lot of people have been asking me about my stock market or stock portfolio and how I got started investing when I was 18. And so I thought maybe I'll just share my story and share how I go ahead and invest in the stock market and kind of my perspective on everything so that you have a gist of why I do the things I do and how I do those things. So hopefully this video is somewhat fun and interesting for you guys, and hopefully you can maybe learn something. And also, if you have any questions, feel free to leave them in the comments below and I'm more than happy to answer them for you. So let's just get into it. So I know I said I started investing in the stock market when I was 18, but I think the actual number is like when I was like 17 and a half or something. I know it doesn't really matter, but when I was in high school, I believe I was a senior at that time, I took a financial class, and this class pretty much changed my life. I had a high school teacher named Andrew Hallam who wrote a book called The 9 Rules of Wealth That You Should Have Learned in School, and he was a millionaire teacher, and pretty much on a teacher's salary, which is maybe about 50,000-60,000. My high school that he worked in, which was in Singapore American School, it was just called Singapore American School. He might have received more than that. I'm not really exactly sure how much, but I would think on a teacher's salary, maybe you would be doing 60 to 80 would be a good range. And let's just assume that it was a 60 to 80K per year salary job. And he became a millionaire by investing his money and being very frugal, saving his money, and pretty much using that saved money and putting it into stocks, where he made all of his money and became a millionaire. And so in this finance course, this is where he taught us how he invested in the stock market and how he gave us tips and suggestions on how we as students can invest in the stock market and why we should invest in the stock market, especially if you're a very new investor and if you don't know about real estate investing and whatnot. And I'm just gonna keep real estate investing to the side. It's crucial to invest in real estate as well, but I'm just talking about stocks for this video. And so the very first thing that he taught us was being extra frugal and being very, very wary of your expenses, because expenses are the number one thing that you can control. And so what we would do in school was, every time we bought something like cafeteria food, candy, whatever, he would make us record it and make sure that we knew exactly how much we would spend every week and what our average budget was on a week or a monthly basis, so that we knew what we were spending. And our goal was to minimize that as much as possible. And it's such a great lesson to teach, because out in the real life you have rent, you have other expenses, and really you quickly learn that it's really difficult to save money, and you need to be as frugal as possible. You need to be kind of okay with living below what you kind of expect to when you are making $5,000-$6,000, maybe $4,000 when you go out of college, and you're getting income for your first time in your life. You're kind of like, whoa, I can go ahead and spend all this money. But then it's really important to know that you're doing this for your future. You're doing this to build wealth in the future. And so keeping expenses low again, and making sure that you have enough capital saved up where you have emergency funds, but you also have enough to go ahead and invest, is really important. And so that's the very first thing that we learned in that class. And then that's when we finally were able to then talk about investing. And so when we got into the topic of investing, what he explained is probably the best way to invest for new investors who are just getting started, or even just in general. I think it's a really good rule of thumb for long-term investing, is that it is very difficult to beat the market without having much of a financial background or having an investing background. And so the way he explained it was that any average investor can make 8 to 10% annually in compound interest, which, you know, is incredible because it's not just you're making 10% annually, but you're making 10% annually and adding that to the principal. So it's compounding each year, and that's what's really going to help you grow your money. They say that if you compound a penny in 30 days, or if you double a penny 30 days, in 30 days you'll become, you'll have $1 million or something like that. I don't remember exactly what the number is, but that lesson shows you that when you compound something, it really, really grows over time. And so, he taught us a lot about the strategies that Warren Buffett uses, the way he does it. And to simply put it, I know I'm rambling on, but to simply put it, what he spoke about was put your money monthly into the S&P 500, an index fund, and you should do just fine. And you don't want to be trading it back and forth. You don't want to buy it and sell it and predict the market and try to sell when it's high and buy when it's low. It's really, really difficult. And even Warren Buffett made $1 million bet, which he won, saying if anyone can outperform the S&P 500 within the next decade, he will give $1 million, and no one was able to beat that. And so it kind of shows you that even those financial advisors won't be able to time the market properly. And so the best way for you to invest is literally just to put your money in there monthly and just leave it there, forget about it, and continue accumulating for years on end. And I'm not a financial expert in nowhere. I'm just saying my opinion and what I learned in my life and what I've been doing since I was 17 and a half or 18, so that I can share with you guys what I've been doing. And so for me, I've been trying to put in, in college, I was trying to put about $250 every month into the S&P 500, and that was already so hard for me, but I made sure that I had at least $250 a month put in there and each month. And if I saved up a little bit from my jobs in college, or if I made a little bit of money from my side hustles, I would put $500 the next month into the S&P 500 index. And the index ticker symbol that I put in money in is VFIAX. You can also put it in VOO. It's completely up to you. I just put it in VFIAX. I think the minimum though is like a $10,000 investment in the beginning or something like that. But you can also invest in VO, and I don't think they have any minimum investment. Anyway, so that's what I've been doing. I currently sit at a portfolio of about $39,000 in my Vanguard account. That's where I open my brokerage account. Vanguard, I believe, is one of the best ways to do it. And on this Vanguard account, what I have are two accounts. I have a brokerage account where I put, about $500 now every month into it, and another $250 to $500 in a separate account, which is a Roth IRA account. And I think it's always good to max out your Roth IRA, because you are pretty much paying tax when you put your money in, but when you take your money out, you're not taxed at all. So if you're trying to build wealth for the long term, I do recommend making a Roth IRA account, because in the future, when your money's all well and compounded 30 years from now, you really don't have to pay any taxes when you pull out. So that's what I would recommend, having those two accounts, because Roth IRA accounts also has a maximum contribution limit, which I believe is like $5,500 a year. And so, some people can hit that super quick. And if you do, you can put it in your brokerage account, where you can put, unlimited funds in there. And so that's something that I learned since I was 18, and I've been doing just that. And another thing that he also mentioned was, later down the years, maybe I will most likely start implementing it when I'm 30 or 40, but let's say I turn 30 years old, then I can shift my portfolio and allocate 30% of my portfolio to be in bonds and 70% in stocks. The reason why you want to match your age to your bonds, let's say if I'm 30, I want to put 30% in bonds, is because it mitigates some of the risks that you're gonna have if you kept it at 100% stock allocation for the 30 years. So, let's say 30 years down the line, you kept 100% of your money into stocks and stocks only, but then you realize, oh wait, like a new type of COVID situation comes out in 2030, or 2050 at that point, and you lose half of your assets at that point. And it's just so heartbreaking, and it, you know, you had to let it go for 30 years and you just lose half your portfolio like that. And I know a lot of people who were in that situation in this year, specifically in 2020. So, you know, having bonds at least would help you, especially if you're older. I think it would personally help you mitigate risk. And although you might be expecting a lower return, you're also mitigating a lot of risk. And that's, you know, when you're young, I don't care. Right now I'm still putting 100% into stocks, but as I get older, I'm sure to increase my portfolio allocation and increasing the bonds that I purchase, so then I can mitigate risk once I'm a little bit older. So that is pretty much called the couch potato method, where you just put in, you know, monthly contributions month after month. And I believe it's the easiest and the best way for new investors to get started. And that's what I've been doing since I was 18. And, you know, I've gotten, still, even in this COVID situation, I believe my annual compounded rate of return has been about 10%. And I can put a screenshot up here as well, so maybe you can go ahead and see as well. So hopefully this story wasn't too boring, and hopefully you guys learned something. But this is what I've been doing since I was 18, and I hope that, you know, this video was somewhat entertaining, and hopefully you guys learned something from it. So hope you guys enjoyed, and I'll see you on the next one. Peace.